Commercial loan brokering has serious income potential. You're working with business owners, investors, developers, and entrepreneurs who need access to capital. Those capital needs can be quite large. This isn't something you should blindly jump into just because the commission checks are so big. If you want to win in this business, you need to understand what brokers actually do, why borrowers need help, how lenders think, and what separates a great opportunity from wasted time. So in this video, I'm going to break down what you need to know before becoming a commercial loan broker. And by the end, you're going to have a much clearer sense of whether this business is a fit for you, where the big opportunities come from, and what you need to know before you get into the market. I'm Shane Walton, co-founder of the Commercial Loan Broker Institute. At CLBI, we've helped hundreds of brokerages launch, and we support their growth nationwide. And we work with an active lender network that's used by brokers placing deals with hundreds of lenders across the country. So this video is not just about theory. It's about the key concepts that we see successful brokers building on in the real world. So let's jump in. First, as a commercial loan broker, you really need to understand who needs your help. Commercial loan brokers help people who need capital to move their business ventures forward. That can include business owners, real estate investors, developers, entrepreneurs, acquisition buyers, and any other commercial borrower. These are the people who are trying to do something meaningful in the world. They may be buying real estate or equipment. They're purchasing inventory for their stores or businesses. They're acquiring another business. They're refinancing existing debt or stabilizing their cash flow month to month. But in most cases, the borrower is very clear. They know the destination. In other words, they know what they want to accomplish, but they might not know the financing path to get there. They may not know which lender is right or which products fit or how to present the opportunity in a way that a lender can understand and feels comfortable approving. And this gap between their goal and the knowledge of how to achieve that goal, that is where a broker comes in and creates huge value. You're not simply helping someone to get money. You're helping them to navigate a complex capital market so they can move from where they are to where they are trying to go. Second, to be a successful commercial loan broker, you need to really understand why borrowers need your help. Businesses need capital because growth usually requires money before the payoff arrives. A company may need to buy equipment before it can increase its production. A developer might need financing before a project can be built. A store owner may need some working capital to purchase more inventory before they can sell it, or a doctor's office might need to pay their staff and their monthly lease before the insurance company pays them for all the services that they provided to their patients. A real estate investor will need financing to purchase and to rehab a property before that property can be leased out and start producing income. So capital becomes the bridge in all of these scenarios. It's what enables the entrepreneur or investor to walk from opportunity through execution in the business to payout. And getting capital now allows you to seize the opportunity today to build the business tomorrow and keep it going without running out of cash until you ultimately get the big payout of the profit at the end. But getting that capital is not always simple. Right? Banks are conservative by design, and that's no insult to banks. That's their role. Banks protect depositors. They follow credit policy and they answer to regulators in a way that provides safety for their depositors, their clients. And private lenders don't need to play by those same rules because they have a different role in the market. The banks will reject deals that are too complex or too small or too risky, or the businesses are too young, or they're simply outside their credit box. So a business can be solid and still get declined by a bank. A project can make sense and still not fit the first lender that it's put in front. A borrower can be fundable, but not fundable at the first bank that they call. And that is one of the biggest opportunities for a commercial loan broker. A bank decline does not necessarily mean that a deal is impossible. Sometimes it just means that that deal is in the wrong room. The third thing that you need to know to be successful as a commercial loan broker is to internalize this lesson. Your job is to solve capital problems, not to sell money. If you think your job is just selling money, you immediately become a commodity because money is available from so many different places. Banks have money, private lenders have money, credit funds, fintech platforms have money, equipment lenders and factoring companies have money. So the question is not who has money to sell, but the question is what capital solution actually fits this specific borrower, this deal, this timeline, this risk profile, and today's lender market. And that is a much more valuable question. The broker's value comes from the process that they run through, the diagnosis, assessment, structuring, packaging, lender matching, facilitating the conversations and helping move the deal toward closing. And there's a big difference between saying, I'm a broker, I've got money for sale, and saying, let's figure out together what capital structure actually fits your business, fits you as a borrower, fits this project in this lender market. Because the first approach, I've got money for sale, sounds like a salesperson. But the second sounds like a true business advisor. And the broker who solves problems for businesses is much more valuable than the broker who simply says they have lenders and money for sale. And the fourth big idea you need to understand when starting out as a commercial loan broker is this. You don't need to be a banker, but you do need to learn their language. And that's really good news for beginners. You don't have to come from banking to become a commercial loan broker. You don't need to have spent 20 years underwriting loans or to have worked inside a credit department, but you do need to learn how lenders think. Borrowers and lenders think very differently and consequently talk differently. Borrowers usually talk in terms of goals, pressure, opportunity, problems, urgency. We need it now. A borrower might say, I need money to expand. I need to buy this property. I need to refinance this debt today. I need working capital to keep operations going. I need to close quickly to seize this opportunity. But lenders think differently. They want to know, how will the loan be repaid? What collateral supports it to keep me safe? What is the borrower's cash flow month after month after month? What is the use of funds when I give it out? How will it be used? What's the loan to value? How much am I loaning out compared to how much the client has for skin in the game? What's the debt service coverage? What happens if things don't go to plan? What's the exit strategy if things go south? The broker becomes the bridge then between these two worlds, the borrower and the lender. You listen to the borrower's problem and then you translate that problem into the language that a lender is going to use to make a credit decision. Right? You're not just passing messages back and forth, you're translating between two worlds where people speak different languages and think in fundamentally different ways. And when you can do that well, you become extremely valuable to both sides. The fifth big idea that successful brokers universally understand is this. Deal quality matters more than quantity. New brokers often think that they need a huge number of deals to be successful. They think that success is about more calls, more submissions, more names in my pipeline. But commercial finance actually rewards quality more than quantity because the loan sizes are larger and the commissions are so meaningful. And one strong funded deal can create a significant payout depending on the deal size and compensation. Two good deals can easily create 10x more revenue than a dozen weak files ever will. And the goal is not frantic lead chasing. The goal is to find good opportunities that can actually close. This business rewards judgment, not just activity. And this is one of the most important lessons for any new broker. Busy does not mean productive in our industry. Submissions do not mean income. Funded deals are what matter. And once you understand lender matching, you're going to start seeing why some deals get declined repeatedly while other deals are moving forward quickly and easily with the right lender. So we'll get to that. But the sixth big idea that you need to understand to become a successful loan broker is that lender matching is your real skill. A good loan can still get declined, get a big no stamped on it, if it goes to the wrong lender. The same deal that looks weak to one lender may look like a great opportunity to another lender. Why is that? Because lenders each have their own credit box. They have different product lineups, different risk appetites, different places where they're competitive in the market, different collateral preferences, different industries they like or want to avoid entirely, different loan size targets, and different tolerances for challenged credit. So the broker is not sitting there just asking who lends money. The broker is asking who wants this exact kind of deal. And that question changes everything. The right lender can make a deal feel natural, make it feel easy, but the wrong lender can take that same deal and make it feel impossible. And that is why lender matching is not a side skill in our industry. It is one of the core skills of a successful broker. And the seventh big idea commercial loan brokers need to understand is this: storytelling with documentation unlocks capital. Lenders are not just reviewing documents. They're fundamentally trying to understand risk. They're trying to wrap their heads around the likelihood that they will be repaid and the consequences if they are not repaid. If they don't understand the borrower, the business, the project, the use of funds, the repayment plan, how risk is mitigated, the deal feels uncertain, it's dangerous, and lenders hesitate. A strong broker addresses this by telling the story clearly. Who is the borrower? What do they do? Why do they need capital? How will the money be used? How will that loan be repaid? What makes the deal strong? But they also clearly address the challenges in the deal. What are the risks? How are those risks mitigated? How does the lender stay protected if things go wrong? And then the broker documents that story, supporting and proving it with each additional component in the file. There's a huge difference between sending a pile of tax returns, bank statements, financials, and property documents with no coherent story or explanation compared to sending a clean loan summary that explains the deal first in easy to understand language and then supports that explanation with documentation that proves the truth of the story. The story creates understanding in the lender, and the documents create confidence in that story. And that combination is what makes the lender's job easy. And when you make the lender's job easier, you increase your chance of getting real engagement. The eighth big thing that you need to understand as a business loan broker is this: the money potential can be huge, but earnings come from delivering value. Commercial loan brokering has real wealth creation potential because brokers work on large financial transactions, and even a small percentage of a large funded transaction can become quite a significant commission fee. For example, 1 point or 1% on a $2 million loan is $20,000. 2 points on a $5 million transaction is $100,000 commission check. And that's why so many people are attracted to this business initially. And this isn't small money because these are not small problems that you're solving. But the money is not earned simply by making an introduction. It's earned by solving problems, by diagnosing the financing need and guiding the borrower on the right strategy and structuring the deal properly, packaging it in a way that will make a lender say yes and matching it with the right lender, and ultimately getting that transaction across the finish line. The bigger the capital problem that you're solving, the more value that a skilled broker is providing, and the more they get paid. You don't get paid because you're just near the deal and happen to know two people you introduce. You get paid because you make the deal happen. The ninth big idea that you need to understand before becoming a business loan broker is that brokering is a relationship business. This cannot be overstated. You are facilitating the movement of large amounts of money. There are high-pressure decisions that are being made. There are major opportunities for the business owners and the investors that you're serving. And sometimes there's also serious financial problems that you are helping to address. So they need to believe that you are competent, honest, responsive, capable. And the lenders also need to trust you in the same way. They're relying on you to bring strong opportunities to their doorstep, clean information, properly qualified borrowers. They don't want noise or sloppy submissions or exaggerated stories. They don't want to waste time on deals that were never a fit for their credit box. So you are building trust in both directions or multiple directions Simultaneously, you're building borrower trust, trust with your referral partners, lender trust. If you have no trust, you're just another person out in the market jumping around asking for attention. But with trust, you become a valued capital advisor. And in this business, in this industry, trust is what gets people to take your call. Trust is what gets referrals sent over your way, and it's what gets lenders to engage seriously with your packages. Trust is fundamentally what makes your business continue growing over time. And the final point matters because people who win in this industry do not just get excited and chase after a deal. They build trust, they follow the right process, they work professionally, and they use the right infrastructure at each step. So the 10th thing that you need to understand to become a successful business loan broker is that you need a process, not just motivation and hustle. And motivation can get you started, but process is what keeps the brokerage moving and growing. Without strong processes and SOPs, brokers are going to end up chasing after bad deals. They're not going to adequately narrate and document the loan package. That's going to frustrate your lenders. And ultimately, you're going to lose opportunities that could have been handled better and funded. So a real process, your SOPs, are what give you a repeatable way to operate. Same things that you're doing again and again and again to properly prospect and find new opportunities, qualify them, contract the clients, package up that deal, match it with the right lender, and follow through to closing. And that's the workflow that you need to get solid. When that workflow isn't standardized, everything else is going to become harder. Borrowers will feel it, lenders will feel it, and you as the broker are going to feel it too in your bank account. So if you're looking for an overview of SOPs and the right process flow, check out our video over on our channel on the brokerage operating system, or Broker OS. That will give you tons of information for each of those components in a strong procedural brokerage. But the key foundational concept that we're working on right now is that you need to understand that motivation will get you moving, but process and consistency and excellence is what gets those deals funded. And that's why successful brokers aren't relying on just energy, but they're building systems and using checklists and following up consistently. And that system of theirs is what makes their brokerage profitable. The 11th idea that you need to understand when starting off as a new commercial loan broker is this: training and infrastructure compress your learning curve. Commercial loan brokering has a learning curve. There's no way around that. You need to know the products and the lender categories and deal structure and how to hold borrower and lender conversations, how to document a package in place, and you need to master business development. And trying to figure that all out alone costs time, and it costs deals that could have otherwise funded and paid you a commission if you had done things right. It costs credibility with referral partners and clients and lenders who are underserved. And as you remember, credibility and trust is the foundation of your business. The right training and infrastructure is going to help shorten the launch path for a new brokerage. The right brokerage incubator program will include all of the different components you need to get started in this industry: training and education, lender access with the lender network, templates and contracts and scripts and deal worksheets, and your CRM and your online applications, branding and marketing support, and perhaps most importantly, one-on-one mentoring with an experienced brokerage founder who's walked the path before and knows how to avoid the pitfalls. And you still, even with a program like that, you still have to do the work. But with the right incubator program, you're not starting from zero. There's a big difference between learning by random and expensive trial and error versus launching with the training and tools and lender access and coaching and systems all in place on day one. You still have to become competent, but you do not have to build that entire foundation all alone. And that's a major advantage if you're serious about entering this industry professionally and growing a big brokerage quickly. So if you want help learning how to become a commercial loan broker with all of those sorts of resources, take a look at the Commercial Loan Broker Institute. And in the meantime, get out there, give big to your clients and lenders, and let's make this world a better place together.